Hi there, Holly Shields here for kalkinemedia. What is windfall tax? Let's get into it, but first, sub to our channel and press that bell icon to stay ahead of the game. A windfall tax refers to a tax imposed by governments on specific industries when they make more than average profits due to favourable economic conditions. The Tony Blair government first introduced windfall tax in the year 1997 in the UK. The concept behind such taxes is to fund these abnormal profits for social welfare programs by allocating them for social causes. Windfall taxes include taxes on gifts, winnings from game shows, and horse racing, betting, lottery winnings, gambling, or inheritance. Windfall taxes are mostly levied on these businesses' entities in the targeted industry that have benefited from the financial windfall, mainly commodity-based businesses. So how does government utilize revenue earned from windfall taxes to boost social sector spending? Well, whenever a government introduces a new tax, there's always a difference between those who support the tax and those who are against it. Windfall tax is good because governments are directly using the proceeds from these taxes to encourage funding for social programs. Unfortunately, though, those opposing the windfall taxes assert that they reduce business initiatives to make profits. This section claims that gains made by companies should be invested by them to bolster innovation, as that would ultimately benefit society. On the other hand, however, windfall profits are taxed to motivate businesses to lower their products' prices or services to benefit the consumers. This may lead to a reduced investment because the post-tax profit might not be worth the effort. For example, by May 2018, India was mulling over the possibility to impose a windfall tax on all producing companies to balance the retail prices of diesel and petrol. As per the scheme, these oil producers who are paid international rates in return for the oil they were producing in the domestic field were liable to give away a part of their revenues earned from prices exceeding a certain threshold. Windfall taxes will always remain a controversial issue debated amongst those having shares in profitable companies and society. The issue garnered attention in 2005 when the oil and gas producing companies like ExxonMobil, who made a profit of $36 billion in the year, saw huge profits due to the increasing energy prices. So where does the government impose windfall tax? Well, windfall taxes are likely to be applicable for those individuals who unexpectedly became enriched by receiving a considerable sum of money through a gift, winnings from game shows, or horse racing, lottery, betting. You get the idea. Oftentimes, inheritance and life insurance payouts and gifts from relatives or friends are not taxable for the receipt. Unfortunately, though, the giver of these gifts or inheritances may be subject to federal or local taxes. The money earned by winning a lottery or via gambling comes under taxable income. Since such winnings are completely taxable, they need to be reported by an individual with the Internal Revenue Service, or IRS, by filing tax returns. On top of that, a person who receives a monetary settlement after winning a court case is likely to pay a federal tax on the said amount. So what are the benefits of windfall tax? Well, windfall tax leads to an augmentation of the government's revenue. It helps the government to allocate more funds to the social sector and welfare programs. Thus, to benefit an ordinary citizen, the government uses the proceeds from these taxes to improve civil infrastructure, healthcare facilities, and educational infrastructure. The government also uses the revenues collected from the windfall tax to increase its spending on the defense sector. Proceeds from windfall tax can also be invested in gold deposits. In addition, the government can give one part of the corpus to a reputed charitable organization that is concerned about issues such as child welfare and education for all. So why do business entities oppose windfall tax? Well, business entities can see windfall tax as an arbitrary taxation system and thus can choose to stop with their investments to achieve higher profits. There are two possibilities. Either the companies can demand a higher return on their investments or restrict themselves from making any further investments. This can be detrimental to a country's economy. Windfall taxes can lead to a reduction in the dividend payout to those investing in oil-producing companies. This is because oil-producing companies are owned mainly by pension funds or insurance companies rather than cash-rich investors. Ultimately, this would reduce the funds available to these companies for investment in fuel sources, resulting in a sharp spike in energy costs. So, what are the different ways to reduce your windfall taxes? Well, firstly, you can invest for retirement. No matter how young you are, when you experience a financial windfall, one can utilize this money to secure their future. Within a few years, with the help of compound interest, you can convert a single windfall into a long-term benefit. One way to do this is to fund an individual retirement account, or IRA. Another thing you can do is fund a health savings account, or HSA. You are more likely to qualify for a health savings account if you possess a high deductible health plan, that is HDHP. HSA funds can be used for medical expenses like appointments with a doctor, visits to a hospital, medication, and doctor-prescribed lab tests. Contributions are tax deductible with a health saving account, and you do not need to pay any tax on withdrawals. You can also sell sluggish inventory. If there exist underperforming stocks in your portfolio, they can sell stocks at a loss to lower the capital gains for that year. Capital losses can offset capital gains, but do not help in lowering your taxes beyond that amount. And lastly, carefully analyze additional deductions and tax credits. Many tax deductions and tax credits are available that people are either unaware of or fall to take advantage of. While you're already aware of tax credits for parents, additional deductions related to education and credits are available. If an individual incurs a large amount of healthcare expense in a single financial year, they can write off those costs as well. Plus, to benefit from healthcare tax deductions, an individual's health should meet the income criteria and a certain minimum. Remember that tax evasion is not possible, although better planning and understanding can help us keep our tax bill as low as possible. Plan carefully and do your research ahead of time to not scramble at the last moment. Well, if you like this info, give us a like, comment, and a share. Please sub to our channel, and while you're at it, press that bell icon. For regular updates and info, log on to our website at kalkinemedia.com. This has been Holly Shields for Kalkinemedia.